Welcome back, everybody, to today's Market Explained. It's a FourStar media event. I'm Brian Castle, your host. I'm here with my co-host, Mr. Chris Reardon.
Good afternoon, everyone. Glad to be here. Glad to talk a little about the markets in this summer heat here in Chicago.
Yeah, so we are experiencing some significant heat. In fact, we have a number of friends that came up from places like Texas looking for cooler weather. We're not getting it here, but we're okay with that. Just 'cause it's been so cold, such a cold spring. So I'm fine with the heat, but we'll see. But there's a lot of things heating up in the financial markets, Chris Reardon. And so again, just a lineup here. I'm Brian Castle. Your host, Chris Reardon, is the development director for FourStar, and he's master of all things portfolio and all the products and services that we offer to advisors and clients. He's a dad with three young kids. And Chris, welcome to the podcast.
Thank you, Brian. Glad to be here. Glad to talk a little bit about the markets. What's going on?
And he still loves his Cleveland Indians. Oh, Guardians. Sorry.
Hanging in there.
And I'm CEO and founder of FourStar. I'm an advisor to insiders of companies, as well as a father to Evan and Quinn, and husband to the amazing Tripty, who, by the way, my wife has just taken over as the CEO of the Women's Council of Realtors for National Association of Realtors, which we'll talk a little bit about real estate shortly, Chris. But anyway, that's our lineup for today. So, Chris, why don't we start talking about what's going on in the markets?
Yep. Yeah, I mean, we'll start off as we kind of traditionally do, going through the asset class rankings. Not a whole lot of change, but we are definitely seeing some movement. No change overall as far as ranking order. So international equities is still the number one position. It hasn't moved up or down. It's at 304 points, if you will, and it lost 4 points from the last podcast we taped. So a little bit of a pullback there. Not a ton of movement, though. Domestic equities was completely flat, so it didn't gain or lose any points, didn't move any positioning. It's at 301 points, so really close to overtaking international, potentially for that number one spot. Really, you could almost call them tied. I mean, we could really see those jostle back and forth with how close they are, depending on the that week's kind of momentum. So we'll see how that plays out. If we see any one really takes that front leadership, or if they just kind of are almost tied right in that 1 and 2 position. Commodities, this was the big mover. It's plus 24 points. Still holding that third position. It's at 171 points. So after a pretty big free fall, really saw it almost being overtaken by cash, almost as low as like 130. It's kind of rebounded, and it's got a big injection recently with the price of oil coming back up, and obviously a re-escalation with the Iran and U.S. Conflict going on. So that's kind of gotten another little bit of life in it recently. Cash is in the fourth position at 121 points, -8 since the last podcast, but overall unchanged position. Currencies, 104 points, -4, and unchanged positioning. And then fixed income, still dead last, and it lost 8 points, so it's continuing to be dead last. It's at 86. It's the only one under 100 tally points. So not a whole lot of change. I think obviously the biggest movement we've really seen is commodities getting another injection back up. And then I think obviously, could we see domestic ultimately overtake international equities in that one position? We'll just kind of have to wait and see there if that does happen. So,
well, and Chris, we've been talking about fixed income now for it's 5 years now. That fixed income has been ranked last pretty much the whole time. And rates are starting to rise a little bit more on the longer end, intermediate longer end. And looks like with inflation, they may have to raise rates even more. So our Fed chief comes in, our new Fed chief, with the express idea that they're going to lower rates. But by the time he finally got in the chair, they can't lower rates. They may actually, they're discounting an October rate increase. So fixed income will continue to underperform until rates get high enough that then rates could go lower, and then bonds will do better. But it's been a long run for bonds, and they haven't done well. They don't lose you money like stocks, though, if things get bad. Really, really bad bond market's down maybe 10%, where a bad stock market's down 50 or 70%. So it's not like that, but it's not been a good run for the fixed income market, and it doesn't look like it's going to change anytime soon.
No, yeah, I mean it's definitely. I mean it's been rough since what 2022-ish, right? That's when they started
Yeah,
really raising rates, and
yeah,
even before then. I mean, because if you go even before then, rates were so minuscule. You didn't really want to be in fixed income. Get
right.
half a percent, of interest. So it's been a really tough market, really for the last decade for bonds, plus from that front. So.
Yeah.
Switching over to sectors, year-to-date performance. So we have a new number one. So energy, after falling back to two and being overtaken by technology, did now retake the number one positioning. It's up 29.39%. Obviously, it got a recent, kick in the butt, a recent surge with the re-escalation of the Iran conflict. We've seen oil kind of really pop off the bottom there, and that has helped it. So that overtook the number one position. Technology has now fallen to the number two position. It's up 24.79%, so still right there. Those both of those are pretty close to each other overall. Industrials is holding tight in that third position. And that's where it was. It hasn't changed yet. That's up 18% year to date. Real estate was unchanged as well in fourth. That's up 12.91%. Materials in fifth, that's up 10.71%. And then consumer staples kind of round out that top. You could call it a half. It's 11 names, so it's a little bit below that, but it's up 9.43%, and that's unchanged. So moving on, we have utilities. That's up 9%, and that's unchanged. Then we have a bit of a drop off. So you kind of have these groupings. After utilities, the next best sector is healthcare, and that's at 4.73%. So almost half of the previous sector's return year to date. And that's unchanged after it's a nice, powerful kind of jump off the bottom. On our last podcast, it's held. Financials, though, got a nice injection. That's up 4.71% after for a while being in the cellar. And that actually moved up one spot. It overtook consumer discretionary for the ninth spot. And then consumer discretionary moved to 10th. That's pretty much flat. It's down 0.26% year to date. Obviously dropped one position there. And then still in dead last is communication services, and that's down 1.09% year to date. And that's unchanged. So that's been in the cellar now for probably a couple months now, I think, or a month and a half at least. So not a whole lot
Yeah.
of change overall there. I mean, I think the biggest moves, obviously energy, and then we're really starting to, not only we saw healthcare we talked about last time, kind of coming off that floor, really starting to make a run. But we're also now adding, I would say, financials to that as well. So if those can keep the momentum up and start to build and move up, that'll be, I think, overall good for the economy.
Well, right, Chris, and you look at that bottom group of sectors, not coming on utilities, but healthcare. We just received a number of indicators of healthcare names and healthcare ETFs starting to turn up, and we made a move today, in fact, in one. Financials, the banks have really good earnings. We bought Goldman, and that's up big today based on earnings. And then the consumer spending has generally been pretty good. So consumer discretionary stocks, which is all the restaurants and travel and all that, that all should do better as well. So I see the telltale signs of a big coming change of all these sectors that are in the lower half could start to move up more because of the trends that are going on in the economy. And then information technology has gotten way overheated. That's starting to fade a little bit here. Of course, energy is volatile based on this war. But right now, as you say, they're number one. But that could fade too if they settle this war and oil prices go down. But
Mhm.
I bet we're going to see some big changes in the next couple of weeks, namely in healthcare, financials, and consumer discretionary.
Yeah, I mean, I think we definitely have some news coming out. We've gotten a little bit. I think we've got some today. But as far as is the consumer holding up, I think most signs have been promising that the consumer is holding up,
Mhm.
which is obviously a good sign for consumer discretionary things like that. So
Yeah,
certainly something to keep an eye on.
excellent.
So.
So what else is going on in the market?
Yeah, so looking at kind of the current market, and outside of I guess the numbers, if you want to say, last quarter as we closed last quarter, that was the strongest quarter for major U.S. indexes since 2020. So we saw a huge run in Q2 of this year. Coming into the third quarter, or essentially July, we saw the S&P push to all-time highs, really within 0.5% of its record. But then we've seen that kind of pull back a little bit with obviously the Iran conflict re-escalating. We've seen that volatility get re-injected within the market right now, and that's certainly kind of escalating things, I would say, right now, especially hitting tech stocks. But before that, we saw some of the Mag 7, if you will, really powering the market. And when we track some of our performance of our models, we look at the S&P 500, which is momentum based off of market cap, if you will. So some of the larger names in there, that's where you get the Mag 7, can really propel the S&P 500 higher, where the equal weight S&P 500, where everything's equal, was kind of lagging still. So you can really see a handful of names kind of carrying a market. And that's kind of what we saw with big tech carrying the rebound in July. Meta was up 15%. A lot of that was them building a custom AI chip. So they're kind of getting into the hardware manufacturing side, which is kind of, you think about it, a little crazy. But we're starting to see them kind of pivot to that. And Nvidia was up 4%. So overall, we're seeing some of the large techs carry the S&P. But as you said, Brian, tech, I think, hasn't been all rosy. We've certainly seen, I think, as far as valuations, earnings are really high. The expectations of earnings are high. And we're seeing that hit not only AI names, but it's the trickle down, right? So if we have
Yeah.
these names that are expected to do these big build outs, and you're building these data centers and stuff, any halting to that is going to trickle down to some of their adjacent names, some of the suppliers, all that stuff. So we saw some of them. Nebius, that was down 13, a little over 13.5%. CoreWeave was down a little over 11%. Corning, which we've been in that name earlier in the year, but we aren't now, was down about 10.5%. So there's still this injection of volatility, especially as we have earnings come through. And it's one of those weird things where a company can beat on earnings and still get kind of hit hard because they didn't beat by enough, or the expectations weren't there. So, that's why a lot of eyes are on, as you said, Brian, the consumer, what the Fed's going to do, the Iran conflict, and these impacts can have a huge impact to the earnings of these companies and overall, the market in general.
Well, yes, and there's so many things going on too inside these companies where there's a main vein, if you will, of all the activity in AI and all the spending and all the data centers and all that happening. And then there's others like Meta's doing virtual reality glasses, and they've been focused on that. We invested in a company in our diversified alternative funds that is doing that same way, same thing in a different way. So then there's other future development things. Elon Musk thinks SpaceX will be the largest company in the world forever, and take over the world, for that matter, right? So as he's talking, but anyway, so there's lots of interesting things happening, and the markets react to them in different ways. So
Yeah, I mean, 100%. And, we'll see. I mean, I think as you said, I think the consumer is there. There's a lot of bright spots, but I think the key is there's a lot of unknowns still there as well that could derail the economy. So there's a lot of, that's why I think we see these injections of risk. We see a lot of this volatility spike the markets up and down really fast when it
right,
hits. So
exactly.
pivoting
Good.
over.
Let's talk economics. Yeah. Brian Kasal, I'm the CEO and founder of FourStar Wealth Advisors. Now, we built FourStar on one simple belief that every client deserves clarity, confidence, and strategy built around their financial story. For over 40 years, we've guided clients through every market cycle, helping business owners, families, retirees protect what they built and then grow their holdings to meet the needs over their entire life for them and their family in the future. We are fiduciaries, not salespeople, and that means we sit on the same side of the table as you always. So from personalized portfolios to advanced tax and estate strategies, everything we do is about creating long-term freedom and peace of mind for our investing families. So if you're ready to align your wealth with your goals, visit fourstarwealth.com. Let's start building your future one smart decision at a time.
Yeah, so the Fed met for this. That was the first meeting for the new Fed Chairman Kevin Warsh. They, as predicted, they held rates steady. I think some of the interesting aspects that lifted it is, as you said, Brian, most people expected Warsh to be really pushing to lower rates because they saw him as kind of Trump's man, and Trump really wants lower rates. He's made that very vocal. But I think what came out of it is the higher for longer kind of message that we're seeing, the inflationary pressure that they're really like keeping a close eye on this, and that, as you said, Brian, they're in some cases penciling in a rate hike if we see inflation remain high.
Yeah.
So, I think that kind of put a little bit of a dour expectation on the market to a degree. But, I think the bright spot to that is the Fed is being very cautious. And, with what we're seeing now, a consumer that's still willing to spend, inflation that overall, and we'll cover that shortly, hasn't been out of control yet. It is high, but it's not, extremely high by any means. And a jobs market that is showing some signs of slowing, but is not in full collapse. It's hard to really make the case to lower rates at this point.
Yes, very much so. It's totally different than what Trump expected, for sure.
Yeah. So we'll see. I mean, that, and once again, the environment we're in now could be completely different, even come fall. So, things
Yeah.
could change very fast. We saw that in 2018 when we were in a rate rise cycle. We saw that huge tantrum really the market threw in the fourth quarter there, and they had to come in and lower rates again and kind of reverse course by right after Christmas. So things can change in a quarter. They can change very fast. But as far as we
Yeah.
see right now, I think that's kind of the stage. And then the other big thing I'll highlight, and it's relevant as of today, because we started to see a glimpse of bank earnings. And they started off really strong. JPMorgan posted a great earnings per share. It was at $6.14. The estimate was $5.85, so well above that. Goldman performed very well as well. Both of them were up, I think, 6-7% just today. And a lot of that's off of investment banking revenue and trading, I think, were the big things marked there. Investment banking revenue alone was up 26%. And a lot of that was because we talked about on the last one, we had SpaceX IPO there, the biggest IPO ever. I think the valuation ultimately was like 1.74 trillion or something like that.
Right.
Ultimately. So we're seeing that trickle down once again into bank earnings and into other sectors, which is overall hopefully going to lift the whole kind of a rising tide lifts all boats type of a scenario, right? We're seeing
Right.
not just, just the tech, just AI. Now we're seeing it trickle into the banks and those kind of rise a little bit as well, which is what you want to see in a robust economy.
Yes.
So
So now we have to look at the inflation numbers too.
yep. Yeah. So kind of getting a little bit what I highlighted before. We got the June CPI release that was released this morning. It came in cooler than expected. Headline prices fell 0.4% month over month. It's not a huge surprise because this is kind of we've been so much back and forth if you can think about it. But this was in like that little area where we had the truce with Iran, so gas prices came down. So we kind of saw that relief play out within this reading there. The that reading is the largest 1 month decline since April 2020. So that's a pretty big move month to month. And that pulled the annual rate down to 3.5%. So that was a pretty cold read, if you will, from I think even what the expectations were. The consensus was 3.8 or 3.9. So a 3.5 read is pretty low. Energy was the main, when you say culprit, but the main driver behind that. The CPI energy index dropped 5.7% in June. That was after a 3.9% gain, a 3.8% gain in April, and then a 10% move in March. So you can see a heavy jump. We saw finally kind of a breath of air out, if you will.
Yeah.
That offset slight increases in shelter and food. So we saw kind of the energy do the heavy lifting on that. Core inflation, though, remains sticky problem. Energy So core inflation excludes energy, food and energy. So the
Right.
May core CPI held at 2.9% year over year, up 0.2% month over month. Shelter was up 3.4%. Transportation services was up 4.1%. And medical care was up 3.6%. So, there is some underlying, albeit I think those are somewhat, I don't say muted, but they're not, we're not seeing 4, 5, 6% movements there in those underlying. So it's something to keep an eye on for sure.
Mhm.
It's definitely something to keep an eye on as far as what the Fed's going to do, especially come the fall, which is, I think, where the expectation of potentially, maybe a rate hike, or, if things start to pan out, we start to see some softening, and we see inflation come down or remain, in a cold area, we could certainly see them make an attempt to kind of lower rates. So we'll see. There's definitely a lot of variability out there.
Yes.
Moving over to the consumer. So consumer has stayed resilient. So we kind of talked a little bit about this to a degree. The May income and outlays report showed spending holding up even as we saw, PC inflation, now CPI inflation hit a 3-year high. So we're starting to see, even though we're having this, it's not necessarily historic, but recent high in prices, we're still seeing the consumer spend. One of the key readings will be coming out later this week. We'll get a key read on retail sales, so that'll be interesting. Production signals. So the AI chip production remains red hot. Taiwan Semiconductor reported June sales up 67.9% year over year. I mean, some of
Wow.
these numbers, it's kind of like, it's almost like monopoly money, I feel like, to a degree, because it's
It's
just
hard to believe.
ridiculous.
Yeah, it's hard to believe. Yeah.
Their first half, 2026 revenue was up 35.6%.
Yeah.
So I mean, that's, what is that saying? We're still seeing the AI infrastructure demand, and they're still a dominant driver right now. We haven't seen
Yeah.
that taper off yet. Um, and then, once again, all that AI stuff, a lot of that, as I said, it's feeding into even inflation on that as well. So we
Mhm.
haven't electricity demand. We've talked a little bit about that. You have water that's needed for these data centers, things like that. So and then switching over to the housing market real quick,
Yeah.
mortgage rates.
I got the headline. I got the headline, Chris. Housing
Yep.
prices all-time high, 440,600 to buy a home in America. So that's a big headline. It's a big number. And let's dig into why.
Yeah, I mean, I think that the one of the biggest is, we're seeing this. It's a weird market, right, where we're seeing a crimp on existing home sales. So we're not seeing as much turnover, right? But when we do see turnover, the prices are at, these record highs, right? When they're happening, and a lot of that, why we're seeing these dips and kind of troughs and everything, but we're not seeing that top of the line movement change is a supply. We still have kind of an undersupply. But the issue with that is new home sales are even softer. So even when now they're building these new single family homes, we're seeing that softening because a median price for a single family home is 424,900.
Right.
So I mean, even a new home sale, it's not like it's half that. It's still, a tough purchase there. The biggest driver behind this is obviously mortgage rates. They still range between kind of mid 6% right now. And, depending on, as you alluded to, Brian, what's going on in the market and everything, they can move up or down. But, we've really seen it stuck probably between that 6 to 7% range. So, we'll see if that changes. Obviously, lower interest rates, I think, has a better potential to see that market. But the flip side to that is, if you do get lower interest rates, you'll probably get the demand will stay there, the supply will stay the same. Demand will probably go up, so you're going to see those home prices go up even higher.
Yeah.
It's pretty absurd when you think about it. If we get to an average home price of, say, $500,000 in the U.S., a median home price. Um,
Well, and Chris, the absorption rate of home investing in home buying is much lower than it needs to be based on the population growth. We're only running a run rate of about 4 million homes, but based on population, it should be well north of 5 million homes. So every year, there's another million or so homes that are not purchased that should have been. And there's an estimate as many as 6 million homes and dwellings that need to be supplied to the market to get everybody back up to the normal levels of home ownership. So it's really beginning to be a problem. And these are statistics from National Association of Realtors, which, as I mentioned, my wife's very involved with. It's interesting. We'll see various times when there's a shortage of homes. We've seen that before, and then there's a glut of homes, and that's kind of where we are. There's a shortage of homes now. There was a big glut, like in 2008, for example. They built way too many units. So now that's gone the other way. We'll see how long it takes. A lot of it has to do with interest rates, Chris. A lot of it.
Yeah. I think it's interest rates. You have commodities that play into it, and we saw
Yeah.
kind of even timber, wood to build the houses go up and down, and that affects it. But I think a lot of it even shifts back 10 years. You saw the millennial generation. I mean, there were articles, the death of the suburbs. Millennials are staying in the cities; they're not moving out there. So there was no demand, right? So they weren't
Mhm.
building new homes. And then COVID saw this almost instantaneous shift, not only for that millennial generation, but even, the generations above them that wanted this space. And we saw this exodus, and the market really, that shock, it hasn't been able to kind of recover since. It's just been in constant, the supply has been way under the demand for, and it's going to take, I think, a while to kind of catch back up for sure.
It will. A couple of years at least. If the trends change now, it'll still take a couple of years to clean up.
Yeah, 100%. And then last thing to touch on the job market, June's payroll growth, 57,000. That was the softest number we saw in 4 months. And if you guys recall in the last podcast, most of the jobs market, the payroll has been really strong, actually unexpectedly strong. So this was kind of an unexpectedly weak number that we saw. That was after, like I said, 3 months of that strong print. Leisure and hospitality was the biggest drag. They shed 61,000 jobs. A lot of that, I think, we're kind of at the tail end of the World Cup, the hiring that we saw in cities like Boston, Houston, San Francisco. So I think we saw some of that. Some of it failed to kind of materialize in certain cities. Leisure and hospitality led the negative aspect of it. But the gains were concentrated in professional and business services, social assistance, and healthcare. So overall, I think a little bit of a tepid number there. 4.2%, the unemployment rate held flat. Fell, I should say, fell to 4.2%. But that's, when Brian, you've talked about this before, that's a little bit of a twist, because the only reason it fell was because we saw 720,000 people exit the labor force. So sometimes you kind of get
Yep.
addition by subtraction, right? Kind of type of
Right.
thing where, and then wage growth stayed relatively tepid at 0.3% month to month, 3.5% year over year. So still it's kind of matching inflation to a degree, depending on where that prints. So we're not seeing major wage gains by any means, but it's just kind of keeping pace.
Yes.
So.
Well, now the international markets, the Asian markets have been strong, but there's a company that got listed, Chris, SK Hynix, right? Let's hear about that.
Yeah, so they're a memory chip company out of South Korea. And so they just IPO'd, I want to say it was Friday, so a couple days ago now. They IPO'd at 26.5 billion, which is the largest ever IPO by a foreign company in the US. They closed up 12.7%. I think they're up today about 18% when I glanced this morning as well. So that's definitely an area we talked about. Micron, SanDisk, any of these memory companies. It's kind of like the if you think about it, the gold rush. You have the gold miners, and you got the people selling them shovels and everything, right? Picks and shovels. And the way I look at it, memory, people are kind of piling into this because they think they missed the market. They missed the run up, if you will, with some of the AI, high flyers. but they think they can catch it with the memory because they know that that's going to need to be there, this infrastructure. So,
Well, and Chris,
interesting.
let me make a comment on that. It's interesting how these IPOs are coming out. We had SpaceX come out. That was the U.S. Now we have a big international IPO. These are the two biggest IPOs ever in history, right?
Yeah.
The SpaceX, the domestic, and then SK Hynix is foreign. But then, we haven't seen a lot of IPOs in America for a long time. So now it's starting to come back. And, they usually price an IPO at a certain price, and then it pops and it opens up. Like SpaceX was 135, it went in the 150s, 160s. Then in the next week, it went up over $200 a share, and that's come back down. Now it's in the 150s again. So the only people that have a profit in it are the people who bought it on the IPO, because everybody else is either even or at a loss. Everybody who bought it in the previous week as it ran up to $200 a share. And if it were to go below the original offering price, if enough sellers come in, then everybody's got a loss in it, except for the people that own it from the private market. So there is an element of kind of gamesmanship to the IPO pricing and the timing. And the worst thing for an IPO to do is to go below its pricing level. Then everyone wants to use it as a tax loss candidate, and their taxes in the fourth quarter. So we'll see how that plays out. And the SK Hynix IPO did not pop 20 or 25%, only in the mid-teens. So maybe that's not going to be as strong as people thought it would be. So, but long term, these companies have a future. But in the short run, the market just reacts to supply and demand, and who's in and who's out, and who's got a gain and who's got a loss. And that's kind of what we're seeing right now. All the running around, who's in, who's out, who's got a loss, who's got a gain.
Yep.
And that kind of
Yeah, I
thing.
mean, I think that's an important note is, especially, I mean, you should always be investing for the long term. But if you're going to be buying an IPO, you better like the company, and, you better be in it for the long haul, because IPOs, especially on these kind of high flying stocks in this very volatile market, I mean, for ups and downs, it's the volatility is just going to be kind of astronomical to a degree with these IPOs, because people are trying to, you get a feeding frenzy of people trying to get in them, and then, as you said, Brian, people getting out of them, taking the tax loss. So over time, just like every company, it's going to mediate out, and if you trust the company, you like it, it'll hopefully move up and achieve its objectives. But in the short term, especially, there's a lot of excess volatility there.
Well, and then Elon Musk tells us SpaceX is taking over not just the world, over the entire universe. So we'll see how far things go. And I certainly, given his record, I wouldn't want to bet against him either. So anyway, well, great. Well, thanks, Chris. I'm going to talk a little bit about commodities here. And oil is the key right now. And now we're seeing Brent crude is up more than 8% on July 13th. We're back up in the 80s per barrel. There's a couple different prices of different barrels, but we're seeing West Texas Intermediate crude in the high 70s now. The blockade announcements, and now we're having more conflicts over in Iran. President Trump wants a certain result out of it. He's not getting it. They keep cheating. So he's going to keep at it until he gets, I think he wants regime change, but they're not saying that. But anyway, that's going to keep affecting the price of oil. And then OPEC trimmed its oil demand growth forecast, and the IEA now projects global demand will fall, first annual decline since 2020. So a lot of it has to do with because of the disruption of the Straits of Hormuz, and it's choked Persian Gulf exports. Chris, you were looking at gold, weren't you?
Yeah, yeah. I mean, I think it's really interesting, because usually when you have a geopolitical event like what's going on in Iran, usually you have a flight to safety. You see gold move, right? That's kind of the typical scenario. Hey, volatility's here. All right, flight to safety, move to gold. That's precious metal safe. But despite the geopolitical turmoil, we actually saw the opposite. We saw gold slip below $4,000 an ounce, and that's a pretty sharp drop. And if you guys remember, it was about 4,500 an ounce. So it's off the major highs there. And the reason that we're not seeing kind of the typical kind of sink that we see is because, especially with this Iran situation, when that escalates, then we see oil. So oil moves up, which is going to drive inflation up, which is then gonna obviously push up the potential that the Fed will raise rates, which then makes a stronger dollar, which hurts gold. So it's this weird kind of counterintuitive to some degree factors as far as, gold being pushed down essentially off of increased volatility and geopolitical uncertainty. So
Yeah.
the higher for longer, the stronger dollar is really impacting it. I think gold is up about 2 or 3% today. So we are seeing a bit of a rally off there. And then, we said this, I think, last week, but it's important to note. I mean, it wasn't that long ago. We were talking at gold, could gold break above $2,000 an ounce? So it still has made a historic, tremendous run. It's
Yes.
not collapsing down to, $500 an ounce or anything by any means. It's not out of the ordinary for something after a move like that to kind of take a little bit of air out of it a little bit. And I think we're certainly seeing that right now.
Well, and in recent years, Bitcoin has taken some of the action away from gold. So gold didn't move a lot because of Bitcoin. Now, Bitcoin went over $100 a unit. Now it's back down to the 60s. So it's getting kind of sloppy. It's about half what it was before. But again, 10 years ago, it was below $1,000 a unit. So you're up 62 times even here. You're up 100 times when it was over 100,000 a unit. But we're not seeing the interplay between gold and Bitcoin. Like usually when gold would go up, Bitcoin would go down, vice versa. Bitcoin was the new gold. Gold then became the new Bitcoin, back and forth. But now we're just seeing Bitcoin under pressure, and gold after a huge run is under pressure too. So we're seeing both of them kind of sell off with the dollar getting stronger. So not quite sure what all that means, but nonetheless, we're seeing some different trading patterns in gold and Bitcoin. People are worried about the worldwide debts. The American currency has been intact for over 200 years. It's the longest running currency without major disruption. Usually what happens is governments print money and they run up debts, and then all of a sudden the currency loses value. We've seen this over and over and over in societies throughout world history. So far, the American currency hasn't blown up, but we're almost at 40 trillion in debt. And if we don't solve our debt problem, we will have the same fate. But hopefully we can be smarter than that. We've at least extended it, Chris, for 200 years. But hopefully it can go longer and we don't have all that disruption that the other countries have. And we maintain our leadership role in the world. But gold and Bitcoin are both up substantially in the last decade because of fears of the debt, even in America, which never was a real debtor nation. It was Japan and other countries, South American countries, banana republics full of debt. Now America's in the same position, which is not a good thing. So we'll
Yep.
see. We'll see how this plays out if our leaders can get a handle on it.
No, exactly. I mean, the issue that comes from it is when you run into that too, is the way governments typically get out of that is they inflate their way out, right? They can always
Right.
print more money, so they'll just print more money, and that's why gold has always been seen as a hedge, right? Because then the value of the dollar goes down, and gold tends to hold its value more. So we'll see though. I think, I mean, we've talked about it, I think, on here, but it's definitely something that needs to be addressed, and it's only going to get worse and worse. I mean, it's
Yeah.
not going away. The interest
Yeah.
is just adding up. So.
Well, absolutely. And I think that's the end of our economic discussion. So now into our segment, Chris, what we see out there, interesting things that we see out there we want to comment on. Chris, why don't you start it off?
Yeah, I mean, the first thing I'll mention, and Brennan True, have a couple comments on, obviously, the biggest thing we had this week is Senator Lindsey Graham kind of, well, it was unexpectedly passed over this past weekend, July 12th, 13th weekend at 71. He was obviously one of the major Republican leaders and a staunch ally to the president. So it's definitely going to have, market implications, if you will, just as far as some of the bills and some of the things he was championing. Now is they're going to look, and were they able to, are they able to push them through now? Things like that as markets adjust to that. So, I think it's one of those weird things that kind of, it is political, but it certainly spills over into the economic and financial area. And I don't know if you want to make any comments on that, Brian, as well. I know.
Yeah, I mean, Lindsey Graham, obviously, he clearly was a guy who loved being a senator, and he, just had negotiated what they thought would be a peace arrangement over in Ukraine. and then he comes home and he passes away. They're still yet to release the real reason. His father had died of a heart attack. They believe it was heart related, but when you're over dealing with Russians, you never know, right? And there's some concern that maybe there was some foul play, but doesn't sound like it. And his sister, who was very, very close to him, and he raised his sister, she's become now the senator today. They swore her in as the senator for the rest of his term. So
Yep. Yeah, so we'll see how that plays out. But as I said, it could have some ramifications depending. They're able to push it through. Obviously, not too much ripple to the economy, but
yeah.
we see opposition there. Moving on, New York became the first state to impose a data center moratorium. It's kind of interesting because we talked a little bit about that, where you have these communities that are really pushing back against data centers that are coming in there. They raise energy prices, they suck up a lot of water. They are loud. So New York became the first state, and they're halting any new construction for large data centers for 1 year. So we'll see. I mean,
Yeah.
and that's once again, even if we have these AIs, if we start to see a concerted pushback on the data centers, we could see that start to eat into the stock market, because if they can't build the data centers and they can't, there's a lot of things getting economics, the economy that's really being built on the data centers themselves. So,
Well, one way to cut off your growth is to limit growth. And you wonder whether the leaders of that state understand the economic world. So if everyone else is growing, you're not growing, that's probably not a good thing. So we'll see what happens. But if data centers are growing, we need to be part of that, I would think.
yeah, I mean, it's definitely a tough, and I don't know what the ultimate solution is. I mean, everyone wants them, they know they need them, but no one wants to live near them, right?
Mhm.
So a lot of people are projecting as they're like no billionaire CEO or no millionaire CEO is choosing to live next to a data center, obviously. So they're kind of sticking them next to maybe lower income communities that can't afford to. But I mean, I think there's cases to be made, certainly, obviously jobs be created, things like that. So, it's something that's definitely going to be fought, and it's definitely something to keep an eye on, I think, as far as, develops.
Yeah.
Um, Keeping in that, so several states led by California have recently sued to block Paramount's $110 billion Warner Brothers Discovery deal. We talked at length about this, obviously, back and forth. Netflix kind of had it in the bag, then they kind of dropped it after Paramount came back. So the states are alleging that the deal would create a media behemoth that would have kind of almost monopolizing power to raise prices. And they've also even shown stresses to the movie theater market, that they think this is going to drive people away from movie theaters, which are still struggling. So something to keep an eye on. I haven't looked into it as much as far as does it really have legs to stand, but we'll see. And then Apple is another one. They filed a lawsuit against OpenAI, alleging that they still trade secrets. And this is an interesting one. A lot of the dynamic around this has been that Tim Cook's taking a kind of a page out of Steve Jobs' playbook. So Steve Jobs did this back in 2010. He did the same thing to Android, essentially just to slow Android down. Um, and so they could kind of catch up in that competitive advantage or kind of choke them out. And so a lot of people are saying that Apple is kind of filing this, not assuming that they're going to win, just to kind of throw money at them to slow them down before, so they can overtake them or get in front of them. So, interesting dynamics there. Obviously, something you don't like to see, but certainly something to keep an eye on as well.
Yes. Okay. A couple other things that we see out there, Chris. Since the second term of President Trump, the Department of Justice has been doing a deep dive on the election in 2020, when there was alleged to be irregularities in 6 different states that led to Joe Biden's win. And they're claiming that there is evidence now, and what we want to see it. They say they're coming out with it. Certainly, all the talk is about Georgia, and that election might have been stolen. So we'll wait to see what's going on out there. That's the talk. But again, we need to see evidence, and if there is evidence, it'll come out, right? So we'll see what happens there. This week is the All-Star game. And that's tonight, actually. I guess last night was the home run derby. That's an
Mhm.
Americana thing, Chris, if there ever was one. And that comes on the heels of the FIFA. Now we're coming into the finals. There's four teams left in FIFA. And the favorites, the like Norway, the people who were running around rowing in Yankee Stadium, and every time that they would play, they would all get together and do this big rowing motion and everything. They were all over the media. The Scottish guys running around in their kilts. USA was a favorite there for a while as well. So we saw a lot of really interesting things in FIFA. The other interesting thing about it is that while we're going through our 250th anniversary on July 4th, there's certainly certain people that were complaining about America's not as good as it was. Even the mayor of New York, America's not so great. America has lots of problems. Okay, but all these foreigners came to America and said, God, we love America. We think it's fabulous. And they didn't realize that what a great society, how free it is, how clean it is, how you have freedom of movement and all the things that many countries you don't frankly have. So it was good to have the foreigners come to America to engage in FIFA and then also see how Americans really live. And the general view is that they loved America. And two really interesting things came out of it. I think we mentioned this on the last show, that the rest of the world doesn't all have air conditioning. Air conditioning is a big thing in America. They don't have air conditioning in France, I don't believe, right? So that's one big thing that came out of it too. And on a strange note, ranch dressing. So there's lots of dressings for salads, but apparently ranch dressing is just a uniquely American thing. And so I'm sure that the makers of ranch dressing, the green goddesses and all that, those guys are going to have a bull market sending ranch dressing over to Europe and Asia and other places where they never even had ranch dressing. So that's kind of a unique thing. But the American culture, the American system looks great. We're very proud of America, and we're so excited to see all the people come here. Even though we're not a huge soccer country, we tried to compete. We did okay. We didn't make it to the finals, but America certainly is a great place to host any sporting event, as the rest of the world has come to believe. So, anyway, but I think that's all we have for today, Chris. That'll be it for us.
Yeah, then that about covers it.
All right. Well, hey, thanks everybody for being with us. We'll be back again with another episode. And we're going to be doing some interview segments this summer as well, with some very interesting players in the economic system that we think you might want to hear from. So look forward to all that. As of for today, however, we're over and out, Chris.
Take care, everyone.
Take care, everybody. Bye bye now.